Hello everyone. Today we will dive into an essential topic in international finance, the role of each party involved in demand guarantees and standby letters of credit. This is a must know for everyone working with URDG 758 and ISP98. Let's break down each role and how they work together in these financial instruments. The beneficiary. The beneficiary is the main party in whose favor a demand guarantee or a standby letter of credit is issued. In the case of demand guarantees under URDG 758, the beneficiary is the party entitled to payment upon demand, often related to a performance or financial obligation. There is an additional layer here. If there is a counter guarantee involved, the beneficiary of the counter guarantee is different from the ultimate beneficiary. This is key as the guarantor might be both the issuer and the beneficiary in a counter guarantee scenario. In ISP98, which applies to standby letter of credit, a beneficiary is defined as the named person with the right to draw under standby letter of credit. Unlike demand guarantees, standby letters do not involve separate beneficiaries as there is only one instrument and one ultimate beneficiary. Next, let's look at presenter. The presenter can be the beneficiary presenting the document to claim a payment. A presenter can be an agent, a bank, or even the applicant in certain cases. For example, if the applicant has the right to adjust the guaranteed amount, they may also act as a presenter. Alternatively, the presenter could be a third party, like a bank or an insurance company, acting on behalf of the beneficiary or applicant. The key takeaway is that the presenter is anyone entitled to make a formal presentation under the terms of the instrument, whether on behalf of the beneficiary, applicant, or other involved party. The key takeaway is that a presenter is anyone entitled to make a formal presentation under the terms of the instrument, whether on behalf of beneficiary, applicant, or another involved party. Transferee or second beneficiary. Now, what if the beneficiary transfers their right to another party? Here, we have the transferee or second beneficiary. For URDG 758, in demand guarantees, a transferee becomes a new beneficiary under the terms of the Article 33 called transferee. For ISP98, standby letters of credit, Rule 1.11 defines transferee beneficiary as the person to whom original beneficiary has transferred their drawing rights. Under UCP 600, which applies to the letter of credit, this transferred party is referred to as a second beneficiary. The important distinction here is that a right can be particularly or only transferred depending on the terms of the instrument. Now let's see what is Article 33 in URDG 758. Now, sometimes you might want to transfer guarantee to another party. So let's talk about how the transfer of guarantee works. Guarantee is only transferable if the terms specifically say it is. It needs to explicitly state that it is transferable. If it does, then the guarantee can be transferred multiple times up to the full amount available at the time of transfer. Unlike UCP 600, a guarantee can be transferred multiple times up to the full amount available at the time of transfer. But this is important. Even if a guarantee says it is transferable, the guarantor is not automatically obligated to approve the transfer. They only need to do so the extent they agree, and this must be in line with the terms they have consented to. So, when we talk about a transferable guarantee, we are referring to a guarantee that can be made available by the guarantor to a new party called the transferee at the request of the original party known as a transferor. Here is how the process typically works. The transferor includes all amendments agreed upon between the transferor and the guarantor up to until the date of the transfer. Also, there is a critical step. The transferor must provide a signed statement to the guarantor. This statement confirms that the transferee has taken over the transferor's right and obligation under the original agreement. Before you get too excited, let's go over a few conditions that must be met for transfer to happen. First one, signed statement. As mentioned earlier, the transferor must confirm that the transferee is stepping into their shoes. Second, payment of charges. Unless otherwise agreed, the transferor pays any charges related to the transfer. Finally, transferee's role. Any demands or supporting documents under the transfer guarantee must be signed by transferee, not by the transferor. Now let's touch on the assignment of proceeds. This is a bit different but important to understand as well. Regardless of whether the guarantee is transferable, the beneficiary of the guarantee can assign any proceeds they have entitled to under this guarantee. Essentially, they can transfer the right to collect the funds to another party. However, there is a catch. The guarantor does not have to pay these proceeds to the assignee unless they have specifically agreed to do so in the terms of the guarantee. To wrap it up all, here is what you need to remember. A guarantee can be transferred if it's stated to be transferable, but the guarantor does not have to agree to the transfer unless specified. The transferee takes on the rights and obligation of the original beneficiary, and the transferor typically covers the cost. As for proceeds, the beneficiary can assign them, but the guarantor does not have to pay unless they have agreed to do so. Understanding the transfer of guarantee and assignment of proceeds is crucial for everyone involved in financial transactions, contracts, or legal agreements. I hope this explanation has helped clarify these complex terms for you. Moving on to the applicant and instructing party. In both URDG 758 and ISP98, the applicant is the party on whose behalf the demand guarantee or standby letter is issued. The applicant might directly instruct the guarantor or issuer to issue the guarantee or letter, or they may be represented by a third party. If a third party, such as a parent company, gives instruction instead of the applicant, we have a different setup. Under URDG 758, this third party is known as the instructing party, which is distinct from the applicant. In ISP98 and UCP 600, however, there is no distinct term for instructing third party. They are still considered as applicant. Guarantor and counter-guarantor. Now let's talk about the guarantor and counter-guarantor. In demand guarantees under URDG 758, the guarantor is the party issuing the guarantee, often a bank. If a counter-guarantee is issued, the counter-guarantor provides a secondary guarantee to the original guarantor, which is adding an extra layer of security. ISP98 does not formally define a term guarantor or counter-guarantor, but the roles are essential in complex guarantee structures, especially where multiple financial institutions may involve. Issuer and advising party. Under ISP98, the issuer is the bank or financial institution issuing the standby letter of credit. Similarly, in UCP 600, the issuing bank is the institution responsible for issuing the credit. For demand guarantee in URDG 758, the advising party is the intermediary, often a bank, that advises the guarantee on behalf of the guarantor. ISP98 refers to the intermediary as an advisor, while in UCP 600, they are known as the advising bank. Finally, let's look at the confirmer or confirming bank. In ISP98, a confirmer is a party that adds its commitment to the standby letter, providing additional security to the beneficiary. In UCP 600, the confirming entity is called the confirming bank. Interestingly, URDG 758 does not use the term confirmer, as demand guarantee are structured differently than standby letters of credit, which generally does not require confirmation. Now let's have a comparison of the role of each party under ICC rules, URDG 758, ISP98 and UCP 600. Beneficiary. Beneficiary is the party in whose favor a demand guarantee is issued. Also includes the party in whose favor a counter guarantee is issued, unless the context otherwise required. In ISP 98, beneficiary is a named person who is entitled to draw under a standby. And in UCP 600, beneficiary is the party in whose favor a credit is issued. So in URDG 758 and UCP 600 says beneficiary is the party whose favor a demand guarantee or a letter of credit is issued, and in ISP98 beneficiary is a named person who is entitled to draw under that standby letter of credit. In URDG 758, presenter is a person who makes a presentation as himself or on behalf of the beneficiary or applicant. But in ISP 98, a presenter is a person who makes a presentation as himself on behalf of beneficiary or a nominated person. But in UCP 600, a presenter is a beneficiary or a bank or other party that makes a presentation. So in URDG 758, applicant can be presenter. In ISP 98, nominated person can be a presenter. And in UCP 600, usually beneficiary or a bank or other party that makes a presentation called a presenter. Transferee or second beneficiary. In URDG 758, transferee or second beneficiary is called as a transferee. In ISP 98, transferee or second beneficiary is called as a transferee beneficiary. In UCP 600, transferee or second beneficiary is called as a second beneficiary. So, in URDG 758, transferee is a new beneficiary of a transferable guarantee. ISP 98, transferee beneficiary is a person to whom the named beneficiary has effectively transferred the drawing rights. So in standby letter of credit, transferring drawing rights qualifies a beneficiary as a transferee beneficiary. In Article 38 of UCP 600, a second beneficiary is called as a transferee, who is another beneficiary to whom a transferable credit may be made available in all or in a part. In URDG 758, the applicant is the party indicated in the guarantee as having its obligation under the underlying relationship supported by the guarantee. The applicant may or may not be the instructing party. So, in URDG 758, applicant can be or cannot be the instructing party. What qualifies the role of applicant is having its obligation under the underlying relationship. So, obligation under the underlying relationship is an important factor here. But for ISP 98, applicant is a person who applies for the insurance of the standby or whose account it is issued, which includes a person applying its own name but the account for another, or a person or issuer acting for its own account. But for UCP 600, the definition is so simple. Applicant is the party on whose request the credit is issued, which is a unique term in URDG 758, and the term is not used in ISP 98 or UCP 600. So the instructing party is the party other than a counter-guarantor who gives instruction to issue a guarantee or counter-guarantee and is responsible for indemnifying the guarantor, or in case of counter-guarantee, the counter-guarantor. The instructing party may or may not be the applicant. So instructing party is different, sometimes different from applicant. So this is the party who is instructing to issue a guarantee and who is responsible for indemnifying the guarantor or counter-guarantor. Once again, instructing party is the party other than the counter-guarantor who gives instruction to issue a guarantee or counter-guarantee and is responsible for indemnifying the guarantor, or in case of counter-guarantee, the counter-guarantor. Guarantor. Again, this term is also not used in ISP98 and UCP600. So, as per URDG 758, a guarantor is the party issuing a guarantee and includes a party acting for its own account. URDG 758 also includes a unique term counter-guarantor. This term is also not used in ISP98 and UCP600. So, a counter-guarantor is the party issuing a counter-guarantee whether in favor of a guarantor or another counter-guarantor, and this includes a party acting for its own account. Now let's see what is issuer or issuing bank. This term is not used in URDG 758. In ISP98, issuer is not formally defined, but used as a regular term to identify the person who issues the standby. But in UCP 600, issuing bank is the bank that issues a credit at the request of the applicant or its own behalf. So an issuing bank can issue a letter of credit on its own behalf and for any other party. Advising party, advisor or advising bank. URDG 758 states advising party as a party that advises the guarantee at the request of the guarantor. Where in ISP 98, advising party is known as advisor, and an advisor is not formally defined in ISP 98 but used as a regular term to identify a person who is requested to advise a standby. But in UCP 600, advising bank is a specific term. It's not an advising party, it's not simply an advisor, specifically it's a bank, advising bank. The advising bank that advises the credit at the request of the issuing bank is known as advising bank. Now let's see what is confirmer or confirming bank. Again, confirmer or confirming bank is not used in URDG 758. As per ISP 98, confirmer is a person who, upon issuer's nomination, add to the issuer's undertaking to its own undertaking to honor a standby. Again, confirming bank in UCP 600 is a bank that adds its confirmation to the credit upon the issuing bank's authorization or request. URDG 758 defines the beneficiary as a party in whose favor a demand guarantee is issued, whereas ISP 98 defines the beneficiary as the named person who is entitled to draw under the standby letter of credit. In practice, there is a difference between these two definitions. URDG 758 does not expressly request that the demand be presented by the beneficiary. In that, the definition of presenter includes a person making a presentation on behalf of the beneficiary. However, since the definition of demand in URDG 758 means a document is signed by beneficiary demanding payment under guarantee, in practice, the demand will be made by or on behalf of the beneficiary. The important distinction between demand guarantee practice and standby letter of credit practice is that in a structure using a counter guarantee, the guarantor is the beneficiary of the counter guarantee as well as being the issuer of the guarantee in favor of the ultimate beneficiary. Since the counter guarantee and guarantee are separate instruments, each have separate beneficiary. By contrast, in a structure using confirmed standby letter of credit, there is only a single instrument and a single beneficiary. We have discussed about applicant and instructing party earlier. The applicant is the party on whose behalf the demand guarantee or standby letter of credit is issued. The applicant will be a party to the underlying relationship in the beneficiary, and in most cases, the applicant will instruct the guarantor or issuer to issue the demand guarantee or standby letter of credit. However, occasionally, the instruction to issue the demand guarantee or standby letter of credit may come from third party, such as a parent company. In that case, under URDG 758, a third party giving the instruction is known as an instructing party, whereas under URDG 98 or UCP 600, the third party giving the instruction falls within the definition of applicant. In summary, each party in demand guarantees or standby letters of credit plays a specific role to ensure obligations are met. Whether it is a beneficiary, applicant, guarantor, or confirming bank, understanding these roles is vital in navigating the world of international trade finance. If you found this video useful, please like, share, and subscribe for more insights on trade finance and international banking. Thank you for watching. I'll see you next time. Till then, take care. Bye-bye.